If you've ever found yourself stuck between Seeking Alpha and Motley Fool Stock Advisor, you're not alone. I hear this question constantly. Barry, which one should I pick if I want better stock ideas and better research without wasting time? So in this video, I'm going to give you the real-world answer based on my own testing and subscriptions. And by the end, you'll know exactly which service fits your investing style and why. I am Barry, a certified financial technician. And here's the promise. I'm not going to drown you in marketing claims. I'm going to walk you through how these tools actually feel to use, where they're strongest, and the simple decision rule that makes the choice obvious. First, the quick verdict, because I know you want the answer fast. Overall, Seeking Alpha takes the win, scoring 4.7 out of 5, mainly because of alpha picks, deeper research, quant ratings, market-wide screening, and stronger portfolio tools. Motley Fool Stock Advisor comes in extremely close at 4.6 out of 5, and it shines when you want a curated, high-conviction, just tell me what to buy and why system that's easy to follow with minimal time investment. So think of it this way. Seeking Alpha is the more powerful research workstation. Motley Fool is the simpler, repeatable playbook. Now the big question, stock picking performance. This is a tie at 5 stars each, and this is important because it tells you something. Both services can deliver high-quality ideas. The difference is how they get you there. Seeking Alpha, especially with alpha picks, leans into data-driven selection. You're looking at quant signals, factor grades like value, growth, profitability, and momentum, and you're validating a thesis with peer comparisons and financial metrics. Motley Fool is more about business quality and long-term compounding. It's high conviction, explained clearly, and designed to keep you disciplined through volatility. If you're the type of investor who wants to see the scaffolding behind an idea, like earnings revisions, valuation context, profitability trends, Seeking Alpha feels incredibly satisfying because you can audit everything. If you prefer a short list of what to buy, written in plain English, and you want to avoid analysis paralysis, Motley Fool feels clean and efficient. But this is where the first decisive difference shows up: screening. If your investing process starts with a theme, then a screen, then a shortlist, and then deep research, Seeking Alpha is simply stronger. Seeking Alpha offers market-wide screening with a deep set of fundamental filters and rankings. You can screen for profitability, growth, dividends, valuation, revisions, then jump straight into quant ratings and peer comparisons. Motley Fool's screening is more limited because it's not trying to be a full market discovery tool. It's primarily about curation within the Fool ecosystem, and that's not a flaw, it's the philosophy. It's saying, we'll do the heavy lifting, just execute. But if you want to design and refine your own approach, Seeking Alpha wins this category. Now let's move into research and portfolio tools, because this is where the workstation versus playbook difference becomes crystal clear. Seeking Alpha is like a diagnostic hub. You've got quant ratings, factor grades, transcripts, author research, bull and bear arguments, and peer comparisons that help you validate and challenge your thesis. Then you can track your portfolio and see exposures and risk signals in a way that's genuinely useful for serious investors. Motley Fool is more focused. The research is clear, cohesive, and designed to keep you aligned with the long-term narrative of each recommendation. It's less about debating every angle and more about building conviction and staying the course. So if you enjoy triangulating evidence, Seeking Alpha feels richer. If you want a unified perspective with fewer voices, Motley Fool feels calmer and easier to stick with. Charts are another category where the difference shows up. Seeking Alpha has stronger charting and technical overlays, which matters if you like to stage entries or check trend context, moving averages, relative strength, momentum. Motley Fool keeps charting more basic because it emphasizes fundamentals and long-term compounding, not tactical timing. So here's the key question. Do you time your entries or do you schedule them? If you time entries, Seeking Alpha fits better. If you dollar cost average and hold, Motley Fool's charting is more than enough. Seeking Alpha is designed for investors, not day traders. So let's first talk about Alpha Picks. Alpha Picks is Seeking Alpha's top-tier stock recommendation service, offering high-conviction, long-term investment ideas supported by the platform's trusted quant ratings and in-depth fundamental analysis. If you're looking for specific stock picks and clear buy and sell signals, Alpha Picks has you covered. Alpha Picks currently has 44 active recommendations, 38 are winners with an average gain of 121%, and there are also 6 losers with an average loss of 15%. That's an impressive track record, though it's only been 3 years so far. Each month, subscribers receive 2 curated stock picks that score highly on value, growth, and profitability metrics, typically companies with strong earnings momentum and solid financial health. Alpha Picks has delivered impressive results since launching in July 2022. Their reported portfolio return sits at a 265% gain, while the S&P 500 returned only 79% in the same period. This means the Alpha Picks stock selection is giving you a chance to significantly beat the market. But to be clear, not all stocks perform well. No system is perfect, but so far they are looking very good. Behind me, you can see some of the best and worst performers in the portfolio. If you are interested in Alpha Picks, it costs $499 per year, but comes with a discount. See my link below. If you are wondering how they stack up against the competition, Seeking Alpha is our winner across the board. Trade Ideas is better for day traders and leads the way in AI-driven trade signals and fully automated day trading strategies. Stock Rover offers a better fundamental financial stock screener and integrates with your broker for improved portfolio management. Motley Fool's Stock Advisor service provides a much simpler stock picking service, rivaling Alpha Picks at half the price, but it lacks the quant ratings and deep research. Finally, TradingView offers global market coverage, better charting, pattern recognition, backtesting, and an active social trading community. So, I rate Seeking Alpha the highest, so let's quickly drill down into the why. While the quant ratings are the star of the premium plan, you also get a surprisingly comprehensive set of charting tools for serious technical analysis, featuring over 130 indicators, overlays, and drawing tools. The charting interface supports all major chart types, including Renko, Point and Figure, and Heiken Ashi, giving traders the flexibility to analyze price action from multiple perspectives. Also, you get Seeking Alpha's Stock Screener, which integrates smoothly with its quant ratings, factor grades, and author analysis, making it a convenient research tool for investors focused on fundamentals. It allows users to filter stocks by key metrics, such as valuation ratios, dividend yield, sector, and market cap, providing a quick, data-driven snapshot of market opportunities. With Seeking Alpha's portfolio management tools, I can do far more than just track my holdings. I can actually understand their performance and risk profile. The feature I find most useful is the Portfolio Health Score, which grades my portfolio across valuation, growth, profitability, and momentum using the same quantitative model behind Seeking Alpha's quant ratings. Finally, I want to shout out the Follow Top Analysts feature, which empowers investors to tap into the insights of the platform's highest performing contributors and finance professionals. Each analyst is ranked based on their track record of stock performance, rating accuracy, and consistency over time, allowing users to identify and follow those with proven results. So, Seeking Alpha Premium offers many solid features for $299 per year, which is well priced compared to its competitors. In summary, while Seeking Alpha's competition excels in specific areas, I think the combination of Alpha Picks and Premium provides an impressive package for medium to long-term investors. It offers in-depth research so you can find your own gems. That's why I rate it 4.7 stars and gave it my Editor's Choice Award. Now here's the simple decision rule I promised you. If you're a do-it-yourself investor who wants quant-based research, market-wide screening, and portfolio diagnostics with premium stock recommendations layered on top, choose Seeking Alpha, especially Premium plus Alpha Picks. If you're time-pressed and you want a simple stock-picking service that gives you high-conviction ideas with a clear plan and minimal complexity, choose Motley Fool Stock Advisor. Want to try it for yourself? Click my link in the description for an exclusive discount or free trial. It's the best way to get started and support the channel at the same time.